You're listening to the REITE Club podcast, where the focus is all about helping you grow your real estate investment portfolio and live the life you want to live. Come grow with us and join our community at thereiteclub.com. And now your hosts, Sarah Larby and Alfonso Salemi.
For the right investor, the right deal with the right lender, pieced together, definitely money would be quite available. What are like a typical rate average for first or second mortgages right now that you're seeing? I mean, maybe from the low to the high as an example for first and seconds.
Yeah. So on first mortgages, we're seeing a rate depending on loan to value. It all depends geographical area, loan to value, and all this. But typically, it's in the 10% range. So how that's broken up could be 6.99 and 2.99. It could be 8 and 2. Could be 9 and 1. So that's generally a first mortgage. And then if it's over, like those jumbo mortgages over $1 million, we might see a 1% higher, so maybe 11%, and how that's split up between the monthly payment and the lender fee is a little different. And then second mortgages, again, we tend to shy away from second mortgages because those are the homeowners that tend to be in trouble, but we do see those rates between 10 and 14, maybe even 15%. And again, the split depends on a lot of things, the loan of value and geographical area and that sort of thing.
Yeah, absolutely. So money is accessible, but it's a little bit more expensive, and hopefully there is an exit. I'm guessing when you're doing your underwriting, you're looking for an exit and to ensure that that person is going to have a plan, whether it's 3 months, 6 months, 1 year, et cetera, to be out of that money either by selling or refinancing with with your firm again, with a lender, B lender, credit union, all that good stuff. What are you seeing, in today's market right now? I mean, there's, crazy bidding wars on, 10 offers on one property, prices just out of the, ballpark. What are you seeing, just to switch it up a little bit, just even from an appraiser standpoint? And it could be from a private, like if somebody's private lending or not, what are some things that are changing, from appraisals that we're seeing versus maybe 2 years ago?
Yeah. We're seeing timelines change, and we're seeing appraisers declining appraisals. It's a phenomenon I've never seen in my whole career. So there's no quick close right now. That's what we're seeing. So have all your ducks in a row, what we mentioned earlier, is really, really key during this time frame, because you're going to want to jump on that property as soon as you see it. So if you have to waive condition for your conditions, which most investors do, then we've got some time for that appraisal. We're seeing that there's emotional buyers. Well, this last week has been a little funny because things have seemed to slow down a bit, but we did see emotional buyers. So the investors were really contending with home buyers, which they won't make their numbers work, but then the home buyers are buying things 100,000 over ask. Anything you want to add, Victoria, on your side?
Yeah, so I'm seeing the emotional buying as well. So I'm seeing that the appraisers, sometimes the appraisals are coming in a little lower than what I've seen people purchasing. Some appraisers are better at gauging the market as well. There's some investor focused appraisers, and so they can see things that have sold and stuff like that. And so I've seen comparables too before September 2020, October 2020, when the market wasn't as crazy. So we are having to go back and ask the appraiser, okay, can you relook at some of the comparables and stuff, as the market isn't how it was before. It is a little crazier. So we are seeing the values coming in a little less than before.
Yeah. And we've adjusted to our underwriting so when we're looking at BRRRRs, we know that some people have to perhaps leave a little bit of their money in it. So we're adjusting our underwriting to incorporate that. So we're very conservative. We run the numbers at 70%, the average after repair value. And we make sure ahead of time, obviously, that the investor can qualify for that 70% ARV. And then if they get the 80, then that's bonus.
I'm curious to ask you, Angie. So you, again, going back to the private lending, how did you grow your fund? Like, how did that happen as a private lender?
Yeah, so we had RSP funds already just sitting there at, a financial institution. And I was introduced to this about 8 years ago, and how to use your RSPs as funds to lend. So that's how I started with that. But then with the cash side, it's equity in our own home. So and because of that, it's a write-off. It's a mortgage, but we can write it off because it's a home equity line of credit. And that's essentially what we've been doing for several years now.
Yeah, that's awesome. I mean, and I don't think that a lot of people think of being able to utilize, their funds to loan out. Sometimes that's like an afterthought, and especially when it comes to registered funds, because there's tons of people that are, sitting on 4%, 3% annual income from, measly mutual fund returns.
Yeah.
Why do you think that the banks don't encourage people to do that? And they encourage more, along the lines of like investing in like mutual funds of their own?
I think it just comes down to how they mitigate their risk, right? Like the government sees real estate investing as one of the most extreme high risk activities. We have hundreds and hundreds of investors who can prove them wrong, but it's just the box that they're in. They want to mitigate the risk. So they don't, they just don't advertise that you can self-direct your own registered funds.
Yeah, and it takes away money, I think, from them, because you'd have to move it over to Community Trust and Olympia Trust.
Yeah. And most financial advisors, like you go to somebody, I don't know, Freedom 55, whoever it is that you have your money with, they're not going to let you know this, because that is going to be a chunk of change that you're taking away from their own portfolio. Self-directing means you're taking control of your registered funds. Like we've got, and minimum is 50K. We've got deals up in Sault Ste. Marie with some incredible experienced real estate investors that you can use 50K and help lend to them. It's really an incredible means to grow your wealth as well.
Mm-hmm.
As a follow-up question, so Victoria, what brought you into this world? Like, I know there's mom, obviously, but what's your interest? How do you enjoy this? Or
Yeah, so I guess it goes back to like when I was in high school. So when I was in high school, I used to do my mom's admin and some of her social media. And I've kind of just been around the mortgage brokering business my whole life. My dad also had his license at one point. He no longer does, but yeah, so I've been around it my whole life. And then once I graduated university, I really didn't know what I wanted to do. And so I was like, well, you know what, I'll try it out. We gave ourselves 2 years and it's been going well ever since. And then I got like the real estate bug when we started on Claire's team. We got introduced to the REITE Club, started hearing all the stories, and then my partner, he invests, so I started seeing it through him. And then it's just kind of like been a roller coaster, like all the way from like the beginning all the way to now.
Very cool. And how is it working, together, just day to day, day in, day out? Are you closer than you were before? How's that relationship?
Yeah, so we've always been close. She's one of my best friends. I've always thought that, and so we've always been close. And it was an adjustment at first, being from like a mother-daughter relationship to a working relationship. But I think we've stayed like as close as we were, and I think that helps us too with our communication and knowing that we can trust one another. We used to be in the same office. We're not anymore. I moved out, and yeah.
Yeah, that was the biggest adjustment for me, was when she left, because I've always leaned on Victoria for the technology aspect. And then, as you know, COVID happened and I had to learn all of this just like the rest of the world. And it didn't break me. In fact, we had probably our best year ever. So
yeah, that's awesome.
It's been amazing.
Congrats.
Thank
So
you.
I'm just curious, because obviously, you're seeing deals coming in and you're seeing deals, being loaned on and borrowed and that kind of stuff. What are our risks and downsides? Because I mean, sometimes we talk so much about like all the great things that happen for real estate investing and how, we have access to money, or, there's money that you can loan out, but nothing is risk free, and there's always going to be some downsides. So if one of you can talk about that and, what to be cautious about.
Sure, I can start with that. I mean, the biggest risk is nothing is guaranteed. You can lose all your money. And I mean, it's the scariest thing, and that's what people don't want to hear, but it's important that you do understand that nothing is guaranteed. And there are going to be bumps along the way. There's timelines can be extended. There can be, an illness or something that will delay you getting your money back. I mean, that's the biggest risk. And it's important, like we mentioned earlier, that you understand those risks so that you know how to mitigate them. And being part of a team like the Pettyjohn team and the Ringrose team is mitigation of all of that, how to make sure that you're going to get your money back in the end. Victoria, do you have any?
Yeah, I think too, it's like also understanding the markets and stuff that you're investing in, whether it's like the active investor or the passive investor. I know that I've seen that where I know I've seen in my time where the markets have gone crazy, so it's been awesome, but there's also been the times where they've crashed. And so understanding what that looks like too, and knowing that it could happen, that real estate is high risk. It's high risk, high reward. So.
Thanks for listening to the REITE Club podcast and joining our community of real estate investors online at therightclub.com, where the focus is about helping you grow. We look forward to seeing you again next week. Thanks from your hosts, Sarah Larby and Alfonso Salemi.